Still on the third part, specific data to look for when analyzing major economies, and under our project here, fundamental analysis, what to take into consideration when trading currency markets. This is the fifth economy we are looking at, is the sixth indicator out of Canada. And so far we've looked at the employment change, the unemployment rate, the trade balance, and it is now time for labor productivity. As you are going to see, while there are there are some indicators common for all the economies in the world to interpret, like unemployment rate, employment change, trade balance, retail sales, the GDP, and so on, the PMIs, manufacturing, construction, or services. There are some specific indicators that are suitable for a specific economy. Australian and Canadian economies are different than the US, UK, and the Eurozone economies, and this is why I choose to look at them in such a different perspective. But by having all these indicators related to these 5 different economies, then these currencies of all these economies, if they are being put together as an asset, as a currency pair, this asset can be traded here with us at binaryoptions.net.au, and you're just composing your asset based on the currency of each country, individual countries. And by combining the currencies of these countries, you are actually having the currency pairs, the majority of the currency pairs or most of the currency pairs offered by any broker in this world. Now, labor productivity indicator is released by Statistics Canada yet again and shows the change in labor efficiency when producing goods and services. This is a second-tier indicator data, and that means that little or no volatility is expected. However, it is an important one, as productivity and labor-related inflation are directly linked. The most important things to take into consideration when looking at the labor productivity indicator in Canada are the following. The release date is quarterly, about 75 days after the quarter ends, and because of that we are having no 6-month back worth of data interpretation, because it makes no sense to look at 6 quarters back in time and try to make an educated guess. We were looking as far as 6 months. The release time is 12:30 GMT during the North American trading session, and again it is a second tier data. Now, labor productivity, as mentioned earlier, shows the change in labor efficiency when producing goods and services, and if the actual is better than the forecast, then this should be viewed as positive for currency. But on the other hand, if the actual is lower than the forecast, then this should be viewed as negative for currency. If you are trading binary options here with us at binaryoptions.net.au, and if you are choosing an asset, let's say that this time you are looking at Great Britain pound Canadian dollar, and the actual, let's say that the actual labor productivity data is coming lower than the forecast, or lower than expectations, or lower than the estimation, then this should be viewed negative for currency. In this case, the Great Britain pound Canadian dollar should move to the upside. So what you should do is you should buy calls, and buying calls, it means that you are expecting that price at the expiration date to be higher than the strike price, and therefore your option would expire in the money. Why trader cares about labor productivity? Well, it's because productivity and labor related inflation are directly linked. A drop in a worker's productivity is equivalent to a rise in their wages. So when businesses pay more for labor, the higher costs are usually passed on to the consumers? Well, if the higher costs are passed on to the consumer, then inflation is starting to pick up. And if inflation is starting to pick up, then central banks all of a sudden are becoming interested or are paying attention, because inflation is on the mandate on each and every central bank in the world. Again, the release date for labor productivity is quarterly, about 75 days after the quarter ends. The release time is 12:30 GMT during the North American trading session, and this is a second tier data. Low volatility levels expected. We're going to move on with our next indicator, housing starts in Canada, and you will see that the housing starts indicator in Canada is the equivalent of the housing the equivalent of the housing starts indicator in the United States, as they are almost similar, both in interpretation and in what they mean. They are annualized indicators, and that should be taken into consideration because the actual data should be multiplied by 12. But before moving into the housing starts indicator, we need to take a look and to keep in mind that the labor productivity, the release date for labor productivity indicator is quarterly, about 75 days after the quarter ends, and the release time is 12:30 GMT during the North American trading session. And this is a second tier data. Low volatility levels are being expected. Stay tuned please for the housing start next, and we'll take a look at how the housing industry in Canada is faring by interpreting the past 6 months worth of data.